12 dividend stocks for weekly income, a balanced portfolio for steady cash flow. Welcome to WealthEchelon, your go-to destination for expert insights on finance, stocks, and ETFs. Our mission is to empower you with the knowledge and strategies needed to navigate the financial markets with confidence. Whether you're a beginner looking to build a strong investment portfolio or an experienced investor seeking market trends and analysis, we've got you covered. Join us as we break down complex financial concepts, explore market opportunities, and help you climb the ladder to financial success. Subscribe now and take control of your wealth journey. Investing in dividend stocks is a strategic way to generate consistent income while maintaining exposure to potential capital appreciation. By carefully selecting stocks with varying dividend payment schedules, investors can create a portfolio that provides a steady income stream throughout the year. This structured approach ensures that investors receive payments on a weekly basis, minimizing income gaps and enhancing financial stability. The proposed strategy involves selecting 12 dividend stocks categorized into 3 separate portfolios, each aligned with a specific quarterly payment cycle. These portfolios ensure that dividend income is distributed evenly throughout the year, covering every month in a structured manner. The stocks chosen provide a mix of high-yield investments, stable dividend growth, and industry diversification to mitigate risks while maximizing returns. Portfolio 1, January, April, July, October, payment cycle. The first portfolio consists of companies that distribute their dividends in the months of January, April, July, and October. This selection includes Walmart, WMT, Altria Group, MO, WP Carey, WPC, and Cisco, CSCO. Each of these companies offers unique benefits to the overall strategy. Walmart, WMT, is a retail giant known for its long-term stability and reliable dividend payments. Although its dividend yield of 1.1% may seem modest, Walmart's consistent growth and strong financial foundation make it a safe and dependable choice. Given its vast consumer base and essential nature, Walmart provides a defensive position in the portfolio, particularly during economic downturns. Altria Group, MO, offers a high dividend yield of 8.2%, making it one of the strongest income generators in this portfolio. As a company operating in the tobacco industry, Altria has maintained a solid dividend history despite regulatory challenges. Its high yield significantly contributes to the weekly income strategy, offsetting lower yields from other companies in the selection. WP Carey, the WPC, is a real estate investment trust, EREIT, with a 5.9% yield, offering exposure to the commercial real estate market. Real estate investment trusts are known for their strong dividend distributions due to legal requirements to pay out most of their earnings as dividends. WP Carey provides stability and income diversification in this portfolio, ensuring steady cash flow. Cisco, CSCO, a technology sector leader, has a 2.9% yield and a track record of reliable dividend growth. The company benefits from global demand for networking solutions, cybersecurity, and digital transformation. While tech companies are generally known for reinvesting earnings, Cisco's commitment to returning value to shareholders through dividends makes it an attractive addition to the portfolio. Portfolio 2, February, May, August, November, payment cycle. The second portfolio includes AT&T, Blackstone Group, Apple, and Caterpillar. These stocks align with the February, May, August, and November payment cycle, ensuring continuous income in those months. AT&T is a strong telecom dividend payer with a 5.2% yield. As one of the largest telecommunications companies in the United States, AT&T has a consistent cash flow, making it a dependable choice for dividend income. Its substantial infrastructure and service offerings provide stability, ensuring that dividend payments remain reliable over time. Blackstone Group, BX, operates in the alternative investment sector and provides a dividend yield of 2.3%. As a leading asset management firm, Blackstone benefits from diverse revenue streams, including private equity, real estate, and hedge funds. Its presence in this portfolio adds financial sector exposure and enhances dividend consistency. Apple, AAPL, may have a lower dividend yield of 0.5%, but it boasts an unparalleled growth trajectory. The company's dominance in consumer electronics, services, and innovation makes it a valuable asset for long-term appreciation. Although its yield is relatively low, Apple's dividend payments are stable, and its stock has significant capital appreciation potential. Caterpillar, CAT, an industrial sector leader, offers a 1.5% yield. As a major manufacturer of construction and mining equipment, Caterpillar benefits from global infrastructure development. Its inclusion provides industrial sector diversification, ensuring resilience during economic cycles. Portfolio 3, March, June, September, December, payment cycle. The third portfolio consists of Pfizer, PFE, Johnson & Johnson, J&J, Procter & Gamble, PG, and Verizon, VZ, covering the March, June, September, and December payment cycle. Pfizer, PFE, is a stable healthcare dividend payer with a 5.7% yield. As a pharmaceutical company with a strong pipeline of medications and vaccines, Pfizer ensures consistent revenue generation. Its role in the healthcare sector makes it a defensive stock, particularly valuable during economic downturns. Johnson & Johnson, J&J, is a dividend aristocrat consistently increasing its dividend payments for decades. As a diversified healthcare company with operations in pharmaceuticals, medical devices, and consumer health products, J&J provides long-term stability and resilience in the portfolio. Procter & Gamble PG is another strong dividend payer in the consumer goods sector. With a history of reliable payments and brand dominance in household products, Procter & Gamble ensures steady income generation. Its defensive nature makes it an excellent addition, especially during uncertain economic conditions. Verizon VZ is a reliable telecom dividend stock that offers a stable yield. As a major player in wireless communications, Verizon's steady cash flow and essential services provide long-term dividend security. Its strong market position ensures that dividends remain intact even during market fluctuations. The benefits of a weekly dividend strategy. A structured weekly dividend income strategy provides multiple advantages for investors. First, it ensures a consistent cash flow, reducing financial uncertainty and enabling better budgeting. By spreading dividends throughout the year, investors avoid reliance on quarterly payments, which can sometimes lead to uneven income distributions. Another key advantage is diversification. This portfolio selection spans various industries, including retail, real estate, technology, telecommunications, healthcare, and industrials. Diversification minimizes risks associated with sector-specific downturns and enhances overall portfolio resilience. By including multiple industries, the portfolio remains balanced even if a particular sector underperforms, ensuring continuous income generation. The combination of high-yield stocks and growth-oriented companies creates a balanced approach. While stocks like Altria Group and Pfizer provide strong income through high dividends, companies like Apple and Blackstone offer potential for capital appreciation. This blend maximizes overall returns while ensuring income stability. Investors benefit from a dual strategy, securing consistent income while also benefiting from long-term stock price appreciation. Moreover, the selected stocks have a history of consistent dividend payments, reducing the risk of dividend cuts. Companies such as Johnson & Johnson, Procter & Gamble, and Cisco have demonstrated strong financial management and commitment to shareholders, making them reliable components of a dividend portfolio. Their proven track records ensure that dividends remain secure even during economic downturns, reinforcing financial predictability. Another significant benefit of a weekly dividend strategy is the ability to reinvest dividends efficiently. Regular dividend payments provide investors with frequent opportunities to reinvest funds into additional shares, compounding their returns over time. This reinvestment strategy accelerates portfolio growth and enhances long-term wealth accumulation. Building a dividend portfolio with a weekly income strategy requires careful planning and stock selection. By structuring investments into 3 portfolios aligned with different payment cycles, investors can create a steady and predictable income stream. The selected stocks provide a balance between stability, high yields, and growth potential, ensuring that dividend payments remain consistent throughout the year. This approach not only enhances financial security, but also allows for long-term wealth accumulation through reinvestment and capital appreciation. That's it for today's video. If you found this helpful, don't forget to like, subscribe, and turn on notifications so you never miss an update. At Wealth Echelon, we're all about helping you navigate the world of crypto, investing, and financial growth. Have any thoughts or questions? Drop them in the comments below. I'd love to hear from you. Stay sharp, stay invested, and I'll see you in the next one.